University of Mumbai, Mcom Sem 4, Personal Financial Planning, Question Bank Solution. Dash is the difference between the present value of cash inflow and the present value of cash outflow over a period of time. Option A, net present value. Option B, present value. Option C, future value. Option D, past value. The correct answer is option A, net present value. So net present value is the difference between the present value of cash inflow and the present value of cash outflow over a period of time. Dash tells you the current worth of a future sum of money. Option A, net present value. Option B, present value. Option C, future value. Option D, past value. The correct answer is option B, present value. Present value tells you the current worth of a future sum of money. The term personal financial statement refers to a document or spreadsheet that outlines an individual dash position at a given point in time. Option A, physical. Option B, financial. Option C, mental. Option D, health. The correct answer is option B, financial. The term personal financial statement refers to a document or spreadsheet that outlines an individual financial position at a given point in time. MCQ number 4. A personal financial statement shows the individual total asset. Option B, total liabilities. Option C, net worth. Option D, net profit. The correct answer is option C, net worth. Okay, so for personal financial statement shows any individual net worth. Which of the following item is not included in personal financial statement? Option A, gold. Option B, investment in share. Option C, vehicles. Option D, household item. Golds are it is included in your financial statement. Investment in shares are included. Vehicles is included, but household items are not included in your personal financial statement. So your correct answer is option D, household items. So household item is not included in personal financial statement. Dash lists out all flow variables affecting an individual financial position. Option A, balance sheet. Option B, income statement. Option C, credit history. Option D, income tax return. The correct answer is option B, income statement. So income statement lists out all the flow variables affecting an individual financial position. Okay, so in your income statement, from wherever whatever will be your source of income, okay, so that will be affected in your financial position. Concealment of income or false claim to reduce tax liability are cases of concealment means you are hiding something, okay, or you are reframing something. So concealment of income or false claims you make to reduce the tax liability is a case of what? Tax evasion. Okay, so tax evasion is a case where you hide your tax liability or you mispresent it in such a way that you are not showing your correct income. So that is a case of tax evasion, and this is a very important MCQ from exam point of view. Okay, so concealment of income or false claim to reduce tax liability are cases of tax evasion. Next MCQ, MCQ number 10. Using the loopholes of law to reduce tax is known as option A, tax evasion, option B, tax planning, option C, tax avoidance, option D, tax management. Correct answer is tax avoidance. Okay, so if you find out any loopholes to reduce your taxes, okay, so if you find out others ways out, okay, so means you are doing some false activity, that is called as a tax avoidance. Next question, MCQ number 11. Dash is a device which satisfies the requirement of the law but not in accordance with the intention of the law. Option A, tax evasion. Option B, tax planning. Option C, tax avoidance. Option D, tax management. The correct answer is option C, tax avoidance. So tax avoidance is a device which satisfies the requirement of the law but not in accordance with the intention of the law. Okay, so tax avoidance is a device which satisfies the requirement of the law but not in accordance with the intention of the law. Okay, so it is mispresentation of your information. You are not showing your correct information. Okay, whatever you are hiding it. Okay, so it is called as a tax avoidance, means you are presenting your income in such a way that you are hiding some of it. That is called tax avoidance. Next MCQ, MCQ number 12, reducing tax liability utilizing the deduction, assumption or reliefs allowed in the act and rules is called tax evasion, option B tax planning, option C tax avoidance, option D tax management. So correct answer is option B tax planning. Okay, so if you're reducing your tax liability by using various source which is approved by the law that, under any act, then you are doing your tax planning in the proper way. So you're utilizing the deduction, assumption or reliefs allowed in the act and rules is called as tax planning. Compliance of a legal requirement in connection with the tax is the essence of option A tax evasion, option B tax planning, option C tax avoidance, option D tax management. It is the correct answer is tax management. Okay, so when you are doing legal requirement, you are fulfilling your requirement in connection with the tax. It is a important requirement for the tax management. A dash is a longer term investment that come in handy in case of emergency or to help you to reach one of your future goal. Option A checking account, option B current account, option C saving account, option D virtual account. The correct answer is option C saving account. A saving account is a longer term investment that comes in handy in case of emergency or to help you to reach one of your future goal. Okay, so saving account is a longer term investment that comes in handy in case of an emergency or to help you to reach out your future goal. MCQ number 15, having multiple kind of credit such as credit card, personal loan, auto loans, mortgage and or student loan will help you to hurt your credit score, improve your credit score, not impact your credit score in any way, give you a headache. The correct answer is it is going to improve your credit score. So having a multiple kind of credit such as credit card, personal loan, auto loans. Okay, so these various types of loans will give you or it will improve your credit scores. Then next MCQ, MCQ number 16. Cancelling an old credit card. Option A could hurt your credit score, will improve your credit score, has no impact on credit score, is something you should always do after you pay off a card. The correct answer is it would hurt your credit score. Okay, if you're cancelling your old credit card, it is not good, it will hurt your credit score. Applying for the number of loans or credit card will hurt your credit score if you do it in a short period of time. Option B will have no impact on your credit score. Option C will not hurt your credit score as long so you do not apply for a lot of different types of credit in a short time frame. Option D would hurt your credit score depending on what types of credit you apply for and when you apply for. Okay, so correct answer is option D could hurt your credit score depending on what types of credit you apply for and when you apply for it. Okay, so applying for a number of loan or credit card could hurt your credit score depending on what type of credit you apply for and when you apply for it. Okay, so you should not take so many loans on your credit card because it is going to hurt your credit score. Next MCQ, MCQ number 18. A credit report is dashed. A list of your financial assets and liability, your monthly credit card statement, a loan and bill payment history, your credit line with your financial institute. The correct answer is loan and bill payment history. So your credit report is your loan and bill payment history is your credit report. Then in terms of credit card, what does APR stand for? Option A annual percentage rate, option B annual penalty rate, option C annual payment rate, option D annual payoff rate. The correct answer is option A annual percentage rate. Next is a reverse charge mortgage is. So reverse charge mortgage is dash. So what is reverse charge mortgage? Basically this is given to the age group of 60 plus person. This is a type of a loan usually secured by the residential property that enables the borrower to access the unencumbered value. Unencumbered values mean which is free from a debt or a financial liabilities of the property. The loan are typically promoted for the older homeowner and do not require monthly mortgage payment. Borrowers are still responsible for their property taxes or homeowner insurance. So reverse mortgage allow older people to access the home equity. So they built up in their homes now and defer the payment of the loan until they die, sell or move out of the home. Okay, so this is basically what is a reverse mortgage. Okay, so this is basically made only available to older people. So reverse mortgage is only to available to older people is your answer. Okay, so it is only available to older people. Next, MC. Which of the following does the credit score mainly indicate? Knowledge of consumer credit. Option B, risk of not repaying the loan. Option C, amount of consumer debt. Option D, financial resources to pay back the loan. Correct answer is option B, risk of not repaying the loan. Okay, from the credit score, the financial institute can know how well you are paying your loans or debt and you're clearing your amount. So there is no risk of giving you the loan. So as per as credit score, risk of not repaying the loan is a correct answer. Which of this grouping contain three factors that are all used to calculate a credit score? Missed loan payment, high balance on credit card, and ethnic origin. Option B, marital status, high balance on credit card, and personal bankrupt. Option C, a person age, high balance on credit card, ethnic origin. Option D, missed loan payment, high balance on credit card, and personal bankrupt. The correct answer is option D, missed loan payment, high balance on credit cards, and personal bankrupt. Okay, so this is the three main factors that are used to calculate your credit score. That is missed loan payment, high balance on credit, and personal bankrupt. MCQ number 23. Which of the following is usually a good generic credit score? Option A 400, option B 500, option C 600, option D 700. Correct answer is option D 700. Generally, you should have a score of 700 as a good generic credit score. MCQ number 24. An establishment credit rating can be damaged if a person have no collateral. Option B, a borrower failed to live up to the repayment term of an agreement. Option C, a personal income increase. Option D, a personal expenses decrease. The correct answer is option B, a borrower fails to live up to the repayment terms of an agreement. Okay, so an established credit rating can be damaged if a borrower fails to live up to the repayment term of an agreement. Visa and credit card will allow you to purchase on credit and not charge any interest as long as you. Option A, limit the amount of the cash advance. Option B, pay a minimum amount each month. Option 3, pay the balance owing in full. Option D, do not exceed your credit limit. The correct answer is option C, pay the balance owing is full. So Visa and MasterCard will allow you to purchase on credit and not charge any interest as long as you pay the balance owing in full. 4. Please prefer subscribing and click on notification bell icon for the next part. Thank you.